I'm delighted to have you guys here. I'm delighted to be on this call with you. My name is Ken Akure. Uh, I'm delighted to always talk about Bitcoin, talk about cryptocurrency because of the massive opportunities in it, and personally because of how it has changed my life. Uh, Beyond that, how it has changed my understanding of the world and how the world functions. Money rules the world. So if you don't understand how money works, uh, you will be at a disadvantage somehow. Even if you have a lot of money and you don't understand how money really works, you will not have that money for long. So understanding, studying crypto or getting involved in cryptocurrency forces you to understand what money is and opens your mind to the different advantages within the crypto space. My name is Kenakwe, like I said earlier, and I've been in crypto and Bitcoin since uh, June of 2016. Yeah, June of 2016. That's when Bitcoin was about 500 or $600 for one. I personally didn't know it was gonna be this big. If not, I would have sold maybe all my kidneys to buy Bitcoin at the time. But hey, hindsight is always 2020. But wherever we are now, the opportunities ahead of us are always many times bigger than the opportunities that are behind us. So in starting this class, at the end of this class, everyone who has participated, my goal is to make you a master of cryptocurrency because of the things I'll be sharing, the highlights I'll be sharing, and all whatnot. So I want you to focus on the slides, not on my face. You've seen my face already. I like to feel like I'm a fine boy. So let me hide the video so that we can focus on the chat and not on my fine face. Thank you. Okay, so before I go into the class properly, I'm sure a lot of you know this guy. This is Warren Buffett. He's a very popular US investor. He has invested in some of the early companies, Coca-Cola. He's the chairman of his company is Berkshire Hathaway, and he's a billionaire. I think he's worth over $60 billion. He has been on the billionaire list for over Forbes billionaire list for over, I think, over 30 or 40 years. I think for over 40 years, he has been on that list. And he has made his entire fortune trading on the stock market, which he started doing when he was about less than 10 years old, you know. And the reason I'm bringing up this guy to your attention is to let you know why Warren Buffett only trades the stock market and not any other market. Now, there's a saying that Warren Buffett attempted trading the Forex market. Forex market is highly speculative. Between 1995 and 2000, and in a year, he lost about $1 billion trying to trade the Forex market. Now, Forex market wasn't his strength. He thought he really understood how the market works, but when he brought in money into the market, he found out it's not like this. Let me stick to what I know. So he went back to doing what is a master at, which is finding companies and investing in them. But before that, this is why Warren Buffett invests in the stock market. And this is it right here. Now, this chart is a chart of the Dow Jones Industrial Average. Dow Jones Industrial Average. It is an index meaning they take about the top 500 stocks in the US stock market, put them together in an aggregate, create an index of all those stocks, then create an industrial, that's how the Dow Jones was created. Now, this is designed to mirror the strength of the American economy. The American economy is the leading economy in the world right now, is the largest. Uh, the United States dollar is also the world reserve currency. So this is how you know the strength of the United States economy, how the Dow Jones is performing. There are other ones. You have the Nasdaq, you know, Nasdaq 100, Nasdaq 30, and others. But now I'm bringing your attention to this because if you understand this, you can tell in advance where Bitcoin and cryptocurrency is going from by looking at the model that Bitcoin or cryptocurrency market, let me not say Bitcoin, that the cryptocurrency market is attempting to mirror. Now, this chart, this Dow Jones Industrial Average started in 1897. Let me zoom in. Sorry, let me zoom in so that you guys can see. Okay, now this Dow Jones Industrial Average, they started recording, it started trading in 1897. That's when they created this aggregate. Before that, the stock market had been in existence before this date. You know, so from 1897, this index has grown from $17 to over, this is $34,000 right now. You know, $34,000. And it is designed to mirror the strength of the American economy. And why is it so? It is so because the dollar, which is the United States currency and the world reserve currency, it is not designed to keep value. It is designed to lose value over time. Why? Because of inflation rates. And also because the world monetary system, the central banks, they run on a system called the debt banking system or the fractional reserve banking system. And based on that system, they have to put certain things into consideration so that everything will not collapse all of a sudden. And that is to keep increasing or decreasing interest rates as they feel as they see possible, you know, and all that increase in interest rate or reduction in interest rate have effect on the economy, like you see some of these effects on this chart, you know. But overall, then they now created the stock market, which is designed to preserve the value of the currency or the value, the value in the economy. Now, before the stock market, when God Almighty created the world, when he was referring to money, he always talks about the silver and the gold, the cattle upon 1,000 hills. Those are the true definition of value in our world today. So most of the value you see outside in the stock market, even in cryptocurrency, are perceived or artificial value. And I'll take you into details. Now, having painted this background, now let's go into, first of all, understanding money. Because to understand the cryptocurrency market, you must understand what money is and why the cryptocurrency market had to come into play in the first instance. So let's look at money. I'm going to make this slides available to you guys so that you can go through at your own time. So I won't read the slides word for word. I'll just discuss around them like that. So, okay. Now, what is money? Money is any item of verifiable record that is generally accepted for payment of goods, services, and payment of debts, such as taxes, in any particular country or a socioeconomic context. Now, the main functions of money is designed to be a medium of exchange, a unit of account, a store of value, and sometimes a standard of deferred payment. But in this class, we'll focus more on a store of value, a store of value. So let me go on. Okay, so money is actually a concept. To a lot of people say that money is not real. It's just a phenomenon created as a tool of control, created by governments. You know, okay, I'll explain into the details. The money I'm referring to now is called fiat money. There are two kinds of money. There's a real money, and then you have the fake money. The real money is the one that is created by God Almighty. It's been in existence before we came. We met it here, and when we're living, we always leave it here. And that money is gold, silver, precious metals, your oil, cattle, land, any natural resource that a human being needs to improve the quality of their life is classified as true money. That is true money. Why? Because they don't lose value. Year in, year out, gold would always appreciate over a decade, over 20 years. Gold will always appreciate. Silver will appreciate. The land that you have, the price can only appreciate. But then when you talk about paper money or fiat money, the money that is created by government is referred to as currency. Paper money, that money is not designed to hold value. That's why $100,000, 100,000 naira of 2020 is not the same 100,000 naira of 2021. In fact, because at 2020 January, a dollar was at 360 naira. Right now, it's about 500. So it means the naira has lost about 30 or 35%, about 30% of its value in just under a year. The dollar too has lost its value, but it's easier for us to see the one that is real, within our own environment. Okay, let's go on. Okay, so let me, fiat money, like any check or note or debt, okay, let's skip this. Okay, now we've understood money. Now, the functions of money, medium of exchange, meaning if I can wants to transact business with your company, I have to exchange the value that you're giving me with something I hold that is valuable, which is money. And we'll agree at the price that you feel the service or the product you're rendering is worth, then we'll make the transaction. So in that case, money is a medium of exchange. You have something I want, you take it off me. Before the creation of paper money, the only way people could exchange value was what was referred to as the trade by barter, by the barter economy. Now, in the barter economy, you had to, if you had 2 bars of yam, that's like, we're talking about 500 years ago. Or if you had 2 bars of yam, someone else needed, and you needed fish, you had to go start looking for someone that had fish and that needed 2 bars of yam. So that made it a very complex system of exchanging, because the things they were dealing with then were perishable items that would lose their value over time as they begin to decay or get bad. So it was very difficult. So humanity will always advance. Humanity will always come up with a way of solving complex issues. So that led them to the use of commodities or cow. So sometimes started using scarce materials like cowrie shells, special stones, that were not common, and use them to represent money. Now, the next one is standard of deferred payments, meaning you could use it to settle debts, So if I'm owing you, for example, in Naira, it's in Nigeria, I'm supposed to pay you with Naira, meaning I cannot go and bring Ghanaian cedis and be giving you in place of Naira. Why? Because in Nigeria, I cannot really use cedis as a standard of deferred payment. Why? Because that was not what the agreement was based on. It was based in Naira. But if I now offer you a currency that is superior to the Naira, for example, if I'm owing you in Naira and I offer you dollars, you'll most likely jump on it. Why? Because you feel this form of money is a world reserve money. It has more value. So even though within the jurisdiction of Nigeria, Naira is a legal tender, yet I can collect the United States dollar. Why? Because it is a standard of deferred payment in the international community. So I can as well accept it here. Then, of course, money is the measure of value. For example, like I said, this service I'm offering to your company, your boss must have measured the service and say, okay, this is what this amount. So let's pay this amount. So you are measuring the value of the service you think I'm bringing to you. So money acts as that. So after measuring the value, you could now exchange my service with that. But the most important function of money, I'm referring to real money, is money as a store of value. Now, money as a store of value means that the money you had in 1950, if it is true money, it should not lose value now by 2021. And if you compare this to the Naira, you know that that is not true. Because my own father told me that in 1970 or so, or was it 1970 or 1980, I'm not sure. But the house he built everything, I think with less than 1,000 Naira or so. He built a whole house, finished, did everything. Everything was sweet, with just 1,000 Naira. Even as far back as late 1980s, you could buy a Peugeot car with 5,000 Naira. But today, the 5,000 Naira cannot even, if your tire has a problem, you cannot even repair the punctured tire. Your 5,000 Naira cannot. Do you understand? So you cannot even change the tire. Why? But money has lost, the Nigerian Naira has lost value. So if you're looking at the Naira as a store of value, you would have failed. So it means that all those people who have been saving money since the year 2000, saving money in Naira, they've been losing money steadily. Why? Because as at 2000, year 2000, maybe a dollar was still under 100 Naira, maybe 18 Naira or less, or 15, I'm not sure. But I can remember clearly that as at even 2015, a dollar was still at around 150 or 180 Naira per dollar. But today it has lost 3 times its value. So if you are saving all your money in Naira since 2015, you have lost greatly, So how does the common man now survive in this kind of world that is sort of skewed against them? Now, the rich understand these systems, so they come up with ways to preserve their value. Now, gold, a 1 ounce of gold since, let's say, since 1950 till now has only appreciated in value in terms of dollars. For example, silver in 1930, was about maybe $3 per silver. In maybe 1970, was about maybe $3 per ounce of silver. Right now, I think it's over 100. Gold was around maybe $70 an ounce. Right now, it's around 1,700. Do you understand? So can you see all those who were even saving their money in the dollars were not spared? Meanwhile, dollar has much value in terms of, has much more strength in terms of fighting inflation because of the strength of the economy, of the US economy, compared to the Nigerian economy, for instance. Now, we've looked at the functions of money. Now, money has certain properties. And the reason I'm telling you the properties of money and the functions of money is so that later I'll now put Bitcoin beside it. And you will see that Bitcoin has all these functions. Bitcoin does all these functions and has all these properties. Functions of money is fungibility. And fungibility means that you can interchange money easily and it will give you the same value. For example, if you have 1,000 Naira notes, for example, and I say, okay, I'm going to exchange this 1,000 Naira note and give you 1,500 Naira notes, 200 Naira notes, 200 Naira notes, and 250 Naira notes. That's the amount to $1,000, 1,000 Naira. Or I can say I have this $100 bill, but I want to take it from you and give you 25 $20 bills. 20 times 5 is still $100. So you at the end, you still have the same value. So that is fungibility. Money should be fungible. It will be easy for you to interchange value. Then durability. You should be able to withstand repeated use. Like the United States dollar, $20 bill. Some of them have been printed maybe several decades ago, are still in circulation, and they retain their value, even though they take them in when they get so damaged. But so in that case, even our paper money doesn't have that property so much because it's not so durable. They can tear, they can wear over time. The next one is divisibility. This is similar to fungibility, but it's not exactly the same. Divisibility means you should be able to divide your money into smaller units. Like if you have 1,000, if you have 100 naira notes, 100 naira, for example, you know that your 100 naira is made up of 1 naira, for example, you know that your 1 naira is made up of 100 kobo, and your 1 naira is, your 100 naira is made up of 100 naira, sorry, 1 naira in 100 places. So that's divisibility. The next one is portability. Portability, it should be easy for you to carry around, and gold, even though gold is a true form of money, gold is not so portable. $1 billion worth of gold will be so heavy that you can't easily carry it from here to there, from one state to the other without attracting unnecessary attention. So that's why some fraudsters, when they want to move money from out of the country, out of Nigeria, they convert that money to dollars. Why? By gathering several $100 bills, they only need a small space in their luggage to put, let's say, even 100 million naira than to carry 100 million naira in cash. Then the next one is cognizability. This means the ability for you to recognize it when you see it. Meaning, if you see 100 naira notes or 100 naira dollars, it should be easily recognized. The next thing is scarcity. Anything that serves as money should be scarce. It should not be something that anybody can just sit in the corner of their house and manufacture. That's why it's against the law to counterfeit the naira note. It's against the law. You could go to jail, for trying to print the naira or the dollar. Why? You are spoiling it because you're making it not to be as scarce as it should be. Okay, now types of money. There's commodity money, where people were using metal coins, cowrie shells, barley beads, even coins. Okay, coins falls under representative money. So you had gold, silver, some precious stones acting as representing money. Then, of course, you have your paper money that we have today. But today now, we have people use paper money a lot. But then sometimes there's a time that the CBN was coming up with a cashless policy, meaning they were trying to move away from relying on paper to going fully digital. In places like China, for example, they've been digital for a long time, that some children that were born, let's say 10 years ago, don't even know what the paper yuan looks like. Why? Because everything is done from their mobile apps and all that. So why? Because the internet revolution opened up increased speed of transaction, speed of doing business, increased speed of communication also. So money also needs to come to that level of the same speed. Now, people are now shopping on the internet, doing stuff on the internet. So money also must move from being just paper. If I have 100,000 naira, sorry, I have $300 and I want to buy something from someone on Amazon or on AliExpress, I can't send $300 cash that I have here. But if it's electronic, it's easy for me to just press a button or slot my card and the transaction happens. So before Bitcoin, many of such currencies had come up. You had flaws and beans. You know, during the dot-com bubble, there were many of such. There's PayPal. You have Visa as a company doing transactions, working with banks and doing very fast transactions. You have Skrill, Netella. All these are forms of digital money. But all of these, as beautiful as they are not still form of true money. Why? Because they are only still linking you to the fiat money, fiat. Now we'll look at fiat soon. Okay, so in looking at fiat, to look at fiat, you need to see the difference between money and currency. Like I've been trying to do in my earlier explanation, money is not currency. Currency can represent money, but money is not currency. So let me explain. For example, your 100 naira notes, your $100 bill is a currency. It gives it gives life to money, but it on its own, it's only representing money. It is not actual money. Why? It is just a piece of paper that a government created and say, okay, this thing has value. Anytime you want to buy goods and services, use this note, and anybody must collect it from you. So they made it a law. It's a legal tender to collect. If you're in Nigeria and I'm buying something from you, you must collect the naira note. You can't say, no, you must pay me in Ghanaian cedis. No, you'll be breaking the law for even insisting your customers do that, because naira is what is recognized here. So currency is a medium through which money becomes life. Money is often categorized under good money and bad money, or under real money and fake money. Now, good money is considered to be gold, silver, precious metals, even your crude oil, any natural resource of value, even your cattle, your sheep, they can be categorized as true money. Then bad money is considered to be currency, meaning your notes. And the reason why money became bad money, the concept of bad money started in 1970 under the then US President Nixon. Now, there's something called the gold standard. The gold standard was a system where at that time, the US or the dollar was a world reserve currency. And for every $1 that the government printed, they had an equal amount of gold, you know, for every $1 that they printed. So they couldn't just wake up overnight and print more dollars. For them to print more dollars, they need to generate or look for or buy more gold, you know, out there to save in a vault somewhere. Why? So that the paper you're using was not just the paper they were using as money, was just a promissory note saying that this $1 or this $20 is worth this amount of gold. And at any point you want to exchange this $1 for gold, you can take it to the nearest bank and they'll collect this $1 from you and give you gold. That's what true money was at the time. But then in the 1970s, President Nixon, they were fighting the war in Vietnam. He had done many bad monetary and economic policies that messed up the whole thing. So he needed to print more money to fund the war. So, and to print more money was impossible because by law, for every dollar you print, you must have an equal amount of gold. And they had depleted the gold reserve they had, fighting the war and trying to stabilize the economy. So the only way to now keep doing what they were doing was to remove this decree that said every dollar has to have an equal amount of gold. So they now created what is called, they now move from the gold standard to what is called the floating system. And by that system, he allowed the government to print as much money as they wanted. Now, gold was not in the picture. So if they needed $100 billion, they could just say, okay, the central bank print $100 billion, and they print that $100 billion, and they print it and they flood the economy with that money and use it for road constructions, for whatever they wanted to do. But then this had a negative effect. Printing more money had a negative effect in that if you follow the principles, the economic principles of supply and demand, the more the supply increases, the less the value goes down, and maybe the less the demand. So, for example, if I had the 1,000 naira notes, 1,000 naira, that was my net worth. Then suddenly the government printed more, let's say 100 billion naira, 100 billion dollars, and flooded the economy. It means that $1,000 that could buy you a house suddenly will not be able to buy you a house. Why? Because now there are more notes that has come into the market, and the amount of real resources available out there has not increased. Why? Because the number of land available is fixed. You can't increase it. The number of gold is fixed. You can't increase it. Do you understand? As fast as you can print money. So that means this money now, the value has to now depreciate so that more of this money can afford lesser of these things, or the same quantity of these things. So if your loaf of bread used to be $1 to give you one loaf of bread, now that they have printed $100 billion, it means that maybe you need maybe like $2 or $3 to give you the same loaf of bread. And that concept is what is referred to as inflation. And removing the dollar of the gold standard increased the rate at which inflation now became a problem. So now that they now created the floating system, it means that at every point they needed to come up with policies, referring to monetary policies now that can help control the effect and the impact of inflation on the economies. Why? Because now it's not a fixed system anymore, whereby there's a fixed amount of money and a fixed amount of gold. No, that has changed now. So it's become much more complex to manage. So different policies keep coming up from time to time to try and manage and assess the situation. And as human beings, it is difficult to come up with the perfect policies from time to time. So government often make terrible policies. The people responsible always come up with some policies that look good at that time, but later become terrible. And this has led to several economic issues, economic crashes around the world in greater and greater, increasing level of severity, meaning the impact of one economic crisis is often bigger than the impact of the previous one. Why? Because it's all like a bubble, it's all like some Ponzi scheme. Let me use that word. Now, so there have been many failed monetary policies, and whenever those monetary policies happen, the poor are always the one that suffer the most. So in 2018, 2017, 2018, there was another economic crash. They call it the global meltdown or the global recession. Happened in 2018. One of the leading banks at the time, Lehman Brothers, that has been existing for over 100 years, one of the biggest companies in the US then, went under. Why? Because they were part of the people who helped make this bubble get worse. They helped created this bubble by the kind of trading, the kind of policies they were coming up with then. Nana had a ripple effect all over the world economy. Now, because of that crisis, a lot of people lost their job. Companies were in turmoil. Government had to print hundreds of billions of dollars to bail a lot of companies out so that they can continue working and continue providing jobs. Why? Because if you have a society where your big companies are not working, it means there will be no jobs. And if there's no jobs, people don't have money to take care of their families. They will resort to doing anything to find money to take care of their family. They will resort to crime and all sorts. And when crime increases, at a level that the government cannot manage, it becomes anarchy. And when anarchy happens, the government loses control of managing the people. So at that point, it becomes very terrible. So to stop anarchy, they need to give these companies money to keep them running so that people will stay and have jobs. The same thing happened during the last Corona crisis, where government was giving bailouts, giving people economic stimulus, just so that they could still function as normal human beings and not resort to something terrible. Now, this economic meltdown, it was around that period that some guy or a group of people were like, no, we can't continue like this. Money isn't money as it is anymore. If we're dealing with gold as true money, then the magnitude of this crisis will be less. It will be something that will be easily managed, but now somebody just sit down somewhere and print trillions of dollars. Like I think last month, Joe Biden, the president of the United States, said they were going to print or print about $6 trillion over the next few years and flood the US economy with $6 trillion of debt. Do you understand? That is a terrible thing. It will have a terrible effect on the dollar. And as the dollar is going down, you can be sure that the naira would even be affected even much more. Why? Because as bad as the policies in the United States are, our economic policies here in Nigeria and Africa are even much, much worse. So if something affects them times one, it's going to affect us like times 3 or more. Now, so this couple of people, Satoshi Nakamoto, released what was called at the time the Bitcoin white paper or the Bitcoin proposal, saying that we could create a form of money that is not controlled by the government, is not controlled by anybody. Nobody can create more of such money. Nobody could decide that, oh, we're running out of money, let's print more. No, nobody can decide that, oh, inflation rate is getting so high, let's print more money so that we can. Nobody had the right to do that. And this money will be electronic in nature, and it will be like the true gold, which is the real and oldest form of money from creation. God in the Bible always refers to the gold and the silver and the gold. That's for thousands of years, and it will remain that way. Why? Because that is the true form of money that man did not create. So this guy, Satoshi Nakamoto, copied all the properties of gold, in fact, and even improved on them and put them into a computer program, a computer code that is now named Bitcoin. So that was why it is because of these failed economic policies and the lack of governments around the world to manage money as a concept that has led to the creation of Bitcoin. Now, Bitcoin is digital gold. Now, let me explain. Let me read from the slide. Bitcoin is a digital currency. It was created in 2009. It offers promise of lower transaction fees than traditional payment mechanisms. Unlike government-issued currency, Bitcoin is operated by a decentralized authority. Now, this is the key word, decentralized, meaning it's not operated by a single entity. Like the Nigerian central bank, for example, is centralized. It operates the creation, the destruction, and whatever of the naira. But for Bitcoin, we don't have this kind of entity. So it means that nobody can bail out Bitcoin. Nobody can help, nobody can bail out Bitcoin. Unlike fiat money, that's here, reading here, Bitcoin is created, distributed, traded, and stored with the use of a decentralized ledger system known as the blockchain. We'll look into blockchain too. Why? Because as you delve into cryptocurrency, to invest better in cryptocurrency, you must understand fully what blockchain is. Now, there are no physical Bitcoins. Unlike gold, gold is physical, but there's no physical Bitcoins. They are only balances kept on the public ledger that everyone has transparent access to. Now, all transactions in Bitcoin are verified by a massive amount of computational data. Bitcoins are not issued or backed by any banks or government or any individuals. No individuals, no individual Bitcoins, sorry, nor are individual Bitcoins valuable as a commodity. Meaning Bitcoin in itself is just another series of numbers and zeros like any other money. So Bitcoin itself doesn't have any value. So what gives it value? Bitcoin gets its value from the faith that we Bitcoin people have in Bitcoin. Now, we said that Bitcoin money is something that people have come together and they've agreed that this thing has value. So Bitcoin too is valuable because those who participate in the Bitcoin economy see it like it has value. Hey, give me Bitcoin instead of giving me dollar. Why? I feel it has value. I feel it can store the value of my money. I feel it is fungible. I feel it is divisible. I feel I can transact it easily without being censored by any government. So because I believe in it, I hold it. I feel instead of trying to send dollars from Nigeria to the US, I can easily send Bitcoin and even get there faster. So to me, it has value. So I've chosen to use it. So even though it has not been created by any government, there are a lot of believers that believe in it. So it has value. For instance, Venezuela, for example, their money is useless. Why? It has lost almost all its value. To carry $4 worth of Venezuelan money, you need, let's say, about 5 big jute bags, or what you call Ghana must go back. You need about 5 to carry $4 worth, you know, of Venezuelan dollar. So the money has lost value. I'm going to send a picture to the group later to show you how much it costs to buy maybe tissue paper or chicken in Venezuela. You need to stack up cash. So even though the Venezuelan dollars was issued and is believed by the government, people don't have faith in it anymore. Why? It's not keeping value. And we hope that the same thing doesn't happen to Naira, because the same thing has happened to Zimbabwe, the Zimbabwean dollar. The people in Zimbabwe don't believe in the dollar anymore, sorry, in their currency anymore, because it doesn't have value. It has lost value. So they are seeking alternative means. So even though government has issued it, because they don't believe in it, they don't have to use it. They can come up with and start transacting in Bitcoin. Why? Because they have a lot of people around them that believe in Bitcoin. Now let's go on. Now, since the creation of Bitcoin, lots of other hundreds and thousands of other cryptocurrencies have been created. Now, these cryptocurrencies, different other than Bitcoin, are referred to as altcoins. Are referred to as alternate coins. Why? Because they are created with the same technology that Bitcoin was created, which is the blockchain. You know, but then since they are not the real Bitcoin, they are called alternative coins. Now, this is the history of Bitcoin. The first domain, there's a domain called bitcoin.org. It was registered in 2008. And a lot of people, it was registered by the same person or group of people that created Bitcoin. That was in 2008. Then in October of 2008, the name Satoshi Nakamoto came to life. Why? Because he made an announcement on this website talking about the white paper. He said, I've been working on a new electronic cash system that is fully peer-to-peer, meaning it doesn't need a middleman, it doesn't need a central authority. He said, with no trusted third party. Now, that is when this white paper, Bitcoin, a peer-to-peer electronic cash system, was created. For those who would like to read the white paper, I'm going to send it to the group too. I'm going to send it to the group so that you read the white paper. It has some technical aspect too. So if you are not a computer scientist, some of those aspects you might just want to just skim or jump over them and just go to the concept of Bitcoin and what it's supposed to do. Now, in January 2009, the first block of Bitcoin was mined. It is called the Genesis block. We'll talk about what mining is and what a block is later. And that block contains this text: the Times, 03 January 2009. Chancellor on the brink of second bailout for banks. You know, this bailout was because banks were failing. People were losing trust in the banks. The largest bank in the world at the time, I think Lehman Brothers, had collapsed, had crashed. Investors had lost their money. So people had lost confidence in the banking system and whatever products they claimed that they were offering. So to help people regain confidence, governments kept printing money. Governments in Europe and the United States kept printing more and more money. And this was a trigger for Satoshi. So let's release Bitcoin that nobody can bail out. So Bitcoin came into existence that way. Now, who is Satoshi Nakamoto? We don't know who he is. The Bitcoin community doesn't know who he is. He didn't reveal his identity. There are speculation of who that person might be, but nobody knows for sure if he's actually the one. And it's even good that he's not known. Why? Nobody needs him for Bitcoin to go on giving the value that it has today. He created a network that even right now, he himself cannot control. It's like saying that I have 4 eggs. I want to fry these eggs. I want to turn these eggs into an omelet. At the moment I break those eggs, it's impossible for me to turn back those eggs, the eggs that are broken or the eggs that are fried into an egg that have not broken. It's almost impossible. So that's the same thing with Bitcoin. By releasing the Bitcoin code onto the internet, it's like he had broken that egg. So even he himself cannot go back and unbreak what he had broken. He has learned something that was bigger than him. And with the number of people involved in crypto today and how big it's going to continue going, you can see that Satoshi actually started a revolution that is way, way bigger than him. Now, Bitcoin is a revolution against the financial system of the world. It is the people who are not in government or who don't have trust in the ability of the government to manage money, saying, hey, government, you cannot manage money. You cannot dictate what true money is. So we're taking that power off your hands and we're creating a parallel economy or parallel system where that does not have interference of the government or interference from anybody. Now, that is the idea behind Bitcoin, or rather, that was the true idea behind Bitcoin. But as time goes on, that idea has been evolving into somewhat a little bit more complex than the initial idea. And of course, different people have attempted taking over that idea. Some people have come out to say, oh, I'm the real Satoshi. At least 2 people have done that. I am this, I am that. But they could not verify if they were the real Satoshi. In any case, it was not important if they were Satoshi or not. It didn't change what Bitcoin represents. Now, let's go on. So, Satoshi vanished from the internet in 2010, and since then, he has not written anything or released anything or said anything about Bitcoin anymore. We don't know if he was a person, a man, or a woman, or a group of people, whether he's alive or he's dead. We don't know. We all know that he gave the world the greatest network of the internet era, and it was the best gift, especially to us living in Africa in developing economies that are subject to a lot of manipulation because of incompetence of government leadership. So on that note, we have I think we have 13 minutes to go. So I would have loved to start what is blockchain today, but I'll stop here to take questions. Then in our next session, we can keep up from here what is blockchain. Thank you guys for joining this session. Uh, See you in the next one.